Hi, this is Joe Rabil with Invest Like a Pro. I want to focus in today on helping you with spots and zones and having a better idea of what location you should be looking to be a buyer and what location you should be looking to be a seller. I know location sounds like we're talking about real estate, and the reality is that if they talk about successful real estate investing, a lot has to do with location, but the stock market is the same way. And I really want to teach you how to be your own analyst in a lot of ways. And I think if you understand what I'm going to talk about today, I think it should, a lot of the videos that I've brought up so far, I think should start to make a lot more sense, because I want to sort of simplify how you look at what you look for. So I want to go straight into this one specific chart that I have. It's the QQQ actually today, as of today, on a monthly chart. And on the left side, that's the chart. And what I've done is I've actually I've got a lot of drawings on here. So hopefully you can see what I'm trying to say. But I'm going to actually, I'm going to draw down here just so you can see. So the magenta colored line is the 18-month moving average. And again, I'm using a monthly chart. This would be for if you're interested in being like an ETF buyer, if you don't want to really get down into individual stocks. All of the stuff that I show on my videos applies to ETFs and all different types of markets. It's not really necessarily a stock approach. I just tend to focus on stocks, but it can be used in almost any market that has an open, high, low, and close and is active. The more active it is, the better this approach will work. So on the left, you know, what I've done is in red, I've sort of pointed out where the buy zone, what I consider to be buy zones, or areas where you should think about being a buyer, right? And then the gray is where you should be on the lookout, or your thought process should be that I'm thinking to be a seller. It doesn't necessarily mean that you're going to buy and sell in each one of these circles every single time. That's not the point of this. It's your thought process and what you should be thinking about. So let me just go down here again. I'm going to explain this. So the 18 on any time frame, but we're talking about a monthly chart right now. And so if I'm a long-term investor, I want to look at where a stock is in relation to the 18-month moving average. And is that 18-month rising? Is it flat? Is it turning around after being down for a really long time? And what I'd like you to focus in on actually are stocks that have a rising 18-month. I think that's where you have your highest probability from a longer term standpoint. The turnaround patterns on a monthly chart are a little bit more difficult. It takes a little bit more skill level. It doesn't mean you can't do it. And based on a lot of the videos, I've explained how you can do it. But I want to just focus in on a rising 18-month right now, because there are so many opportunities with a rising 18-month in so many different stocks. So what ends up happening is a stock will pull back, and sometimes it'll pull back right to the line, right exactly to the line, to the penny. And then other times it'll pull back and it won't get to the 18-month. And in fact, there might be times where it might not reach it by, you know, it might miss it by a decent margin. And then there's other times where it'll come and break through the 18-month line. And there might even be opportunities where you come in at a real rough vertical level to the downside, much in the way we saw earlier this year. The slope of this line is important. As long as there's slope to the upside, any of these are opportunities to consider being a buyer of whatever stock, whatever market you're looking at, whatever ETF. These are all opportunities. And the reason why is you want to sort of look at this. So if this is the 18, you know, you kind of want to draw in. I apologize for this crude drawing. I know this is not very good. My skills are not great here, but I want you to understand there's a little bit of a zone above and below the 18. It is not an exact point. It's not a hard level. It's a moving average. So a moving average means it's pliable, it's bendable. It's just not a hard and fast number. It's not a specific level. I hope that makes sense. So I would look at it as there's an area above the 18 and an area below. And as long as the 18 is rising, I would view that zone as a buying opportunity. Now, what I like to do is I like to have a 40 on there as well. And it helps to visualize whether you're really in a strong trend. You can do this just by looking at the 18. You can do it that way. I have found in my own work that by using the 40 as a buddy system with the 18, it helps you tremendously to determine how extended a trend is, how strong a trend is, and whether it's getting late in the trend, whether the trend is starting to lose momentum, and that's without having to use the indicator. So, so I like having this as a backdrop. So this, if you have this blue line or the 40 underneath, I think it helps you to visualize that the 18 is not necessarily just a hard number. It's more of an area. So I think if we look at it from that standpoint, and then we go up and look at the chart, you can see the zones where the 18 is above the 40. That just happened this year. 18 above the 40, both lines rising. 18 above the 40, both lines rising. 18 is above the 40 here. And rising, and here, in fact, here it was rising, and here the 18 sort of flattened out a little bit. Not very much, but maybe just a hair. And then here, early in 2011, this was another opportunity where you came in. It was actually the first opportunity where the 18 was above the 40 and both lines were rising. So these are the zones where you should be thinking, I want to be a buyer. Okay, I want to be thinking about buying. Now, you might not buy. You might not buy right at the low. In fact, pretty rare that you're going to catch the bottom based on the way that I do it, because when I'm going to go down to a lower time frame. Once I'm in this zone, I want to go down to a lower time frame. And if this is a monthly chart, I'm going to start with the weekly chart. And so let's look over on the right. So what I've done is the blue line is the 18, it's the monthly trend, the blue line. And as long as that's rising or whether it's falling, I want to keep an eye out for what the red is doing, which is the weekly. So I've kind of overlaid, and again, this is a pretty crude picture, but I think you get the point, right? Higher highs, higher lows, or all of a sudden we maybe start to see a reversal, and then the trend turns down until we reach the 18 months. So if we look at this from a starting point, you can see how far the trend of the monthly trend was from its moving averages. So price was getting stretched away. So there's a higher risk point. So as we start to move away, you're going to start keeping an eye on the momentum of the monthly trend and the momentum of the weekly trend. And if you want, and if you notice what we do every Friday, when I do the review of the market, I not only do it on the monthly and the weekly, but I want to know what is the trend on the daily and what is the trend on the hourly. Because we've had so much volatility and the moves happen so quickly, if you wait for a weekly reversal, it's going to be really, really late. You're going to miss these opportunities to reduce your positions when the market is up and stretched away. You need to go down to a lower time frame right now because there's so much volatility. But what I wanted to point out is that once you get up into these zones up here, you want to be looking at the momentum characteristics. And as I've said plenty of times, each time frame, so there's a monthly time frame that has its own trend and its own momentum characteristics, and then the weekly trend has its own trend characteristics, and it has its own momentum characteristics. We want to know what those are, and then you want to go down to a daily chart and know what the trend is on that, and know what the momentum characteristics are on that time frame, and even go down to an hourly chart. And if you start doing things this way, you're going to notice that what you end up doing is you're more of a seller in this region, and you're more of a buyer in this region. Because what we're going to do is this starts to approach the 18-month. Now this monthly chart, let me just clean this up just a little bit. So now that we've come, let's say we did some reducing because there was some momentum shift. And actually, let me just show you one other thing. So down here, I've drawn in the 1, 2, 3 change in trend. And this might be happening on a daily chart, right? Where you rally up and you break the trend line and then you come and test. That's 2. And the test could be a double top. It could be a marginal new high, or it could be a lower high, just like I've drawn in here. And then when you come in and take out this low, you have a 1, 2, 3 change in trend. Now, this might happen on an hourly, or maybe it's on a daily. If you know you're in this region where you're really extended away from the 18-month, where you get really far away, once you start to get stretched away, you start to go down on the lower time frames and look at the momentum characteristics and say, okay, is the momentum strong on all these time frames? If it is, I'm staying long. If the market starts to show signs that the momentum is slowing, then I'm going to go down to a smaller time frame and I'm going to look for a 1, 2, 3 change in trend. Or I've given you multiple different ways to use the lower time frames as entry points. In fact, last week I showed the entry that the last 2 videos I've done on the market, I've shown 2 shorting examples on the QQQ. I would go back and review those after you've watched this, because I think this might bring it all together for you. Again, let's go back to what we're focusing on. We're focusing on trying to buy pullbacks to a rising 18-month, or pullbacks in the zone between the 18 and the 40 when both lines are rising. So that's really what we're trying to take advantage of. And then when the market gets really too far away and stretched away to the upside, we're looking for signs that the momentum is starting to reverse, and we want to start taking profits. And you can do this on every individual stock. You don't have to necessarily do it on the market, or you could do it on an ETF if you're long the Qs from buying it earlier this year when the market got killed, or way back in 2018, 2019 when the market got killed, and you've had some huge profits and you're looking to maybe take some profits. This is the strategy to reduce that position. You probably don't want to sell the whole thing, but it's probably not a bad idea to consider taking some profits there. So if you try and look at it from this standpoint, now we start working our way back towards the 18-month. Once you get into this zone here, now we're going down to the lower time frames and looking for the opposite to take place. We want a 1, 2, 3 change in trend to take place maybe on a daily chart, where the momentum on the weekly is starting to show improvement. So if you can put this together and have an understanding of what this chart on the left is really telling us, how far away are we from the 18-month moving average? Are we close to it? Is this a buy zone or is it a sell zone? And then once you get too far away, you want to start thinking about reasons why the market could start to turn down. If all the momentum signs are really good, then you might just stay long. Unless we go into some type of a climatic or surging phase. I'm trying to sort of focus on what happens the majority of the time. And the majority of the time, you're going to have signs that the momentum is reversing on a weekly chart if you're looking at that long-term momentum on the monthly. So hopefully this makes sense to you. Please hit the subscribe button and the like button. But I also want to get some comments to make sure that this makes sense, because I'm happy to go through this even in more detail another time. All right. Thank you.